The average 401k lost 20% of its value last year. What should the audience do to increase gains in their long-term portfolios?
They should come to Market Mondays Live in Los Angeles.
First
The
thing.
best decision that you can make.
I wrote that down.
Hey, I mean, listen, 2 tech, 2 index, no stress. But the truth is, like, you have to learn, going back to the accountability part, no one cares about your money the way that you will. So you have to learn how to invest in your own.
And you also, so here's the thing. I came in as a financial advisor in 2007. The worst economic downturn
It was hell on earth back
since the Great Depression.
Yeah.
Yep.
Nothing that we've seen this year or last year
is remotely close
to that.
They thought the country was going to fall apart.
They thought the world was going to fall apart. You got to understand, they was in Greece and couldn't get money out of ATM machines. This was a worldwide economic disaster.
Yeah.
That's when I started. That's where I started.
It's a great time to start.
It is.
Yeah.
It is.
Only can go up from here.
Yeah, you got for real. You got to build the down cycle.
So I started during the worst economic downturn. Then obviously, Corona came. That was another disaster. That was short lived. One thing has remained consistent over the course of time.
Yes.
Equities have gone up.
Yes.
Equities have gone up over the course of time. Sometimes it takes 18 months for it to recover. Sometimes it takes 8 weeks for it to recover. But this is why dollar cost averaging is important, because when you put money into investments while they're down, that's the best time
to buy.
You buy low, sell high. That's like the number one rule thing. So when you are in your 401k and you're putting money in, you got to continue to put money in.
Absolutely.
This is what happened during 2008. A lot of people they panicked. They stopped putting money in. They cashed out their 401k, or they moved from equities, they moved from stocks to stable. Like they put it in the money market.
Yeah.
They saw their account go from 500,000 to 300,000. They got scared. They took it out of stocks. They put it in the money market. You know what happened the next year? Stock market went up 42%. They didn't get any of that.
And if you're a year away from retiring, I get it. But if you're like 50 or younger, you have to keep your money in equities.
Don't panic. It's a long-term play.
Yeah.
Over the course of time, history is the only thing that we can really gauge. History has always said that stocks go up.
Yes.
Yeah, Warren Buffett just said this at the Berkshire meeting.
Investing is not hard.
He was like, look, if over the 100-year span, I've been investing. He's 92 years old. He said, I've been investing since I was in my early 20s.
Yeah.
He said, majority of my life, I'm telling you from a historic standpoint,
it always goes
it's
up.
always going to go up.
Yep.
We don't have to complicate this.
Yep. For those of you who are new, welcome to the show. VLO is a S&P index fund that's like an all-star team. VTI, same thing. Apple, one of the top companies of all time. Microsoft, it's like having Jordan and LeBron on the same team, so you don't have to debate which GOAT to pick, right? You want to have both in your arsenal.
And then also sometimes, so most of the time for 401k, you're not going to be able to put individual stocks in the 401k. Sometimes they might not even let you to put like an index fund depending on the 401k. But you will be able to 9 times out of 10 to do target date funds, something that's extremely beneficial. So it's like the year that you're planning on retiring, whether it's 2030, 2040, 2050, 2060, then they have a fund dedicated to that most of the time in your 401k plan or your retirement plan. And it gets more conservative as you get closer. So it reallocates itself over the course of time. That's extremely beneficial as opposed to you just trying to do it yourself. So when you're investing in your 401k, look at the prospectus, look to see your options. But that's always a good choice.
Options as in what you can invest in long term, not trading options.
Oh, yeah. So, but there's always just think long term. Long story short.
Please.
That's the easiest win.
Please.
5 years minimum. 30, like it's impossible if you invest in the S&P 500 to lose over a 20-year period. I know some people are going to say, hey, I don't have 20. Those 20 years are going to go by like in a heartbeat.
Yeah, just think about this. When we were telling people 5 years, 10 years in 2020,
yeah,
they're already halfway through it.
Absolutely.
Like it's already 3 years.
Yeah.
You know what I'm saying? So like, just be diligent with what you're doing and just have the patience. Have the discipline. More than the patience, have the discipline to stay the course.
I want you guys to do like an assessment real quick. If you started investing when Amigos first came out to their breakup, like what percentage would you be up? I'm assuming at least 1,500%.
Said the game can't come back.
See? And I ain't get left off bad and bougie. So, invest for the long term.
Rest in peace to Tate.
Yes.
Shout out to Honcho.
One of the greatest groups of all time, maybe, or no?
Shout out to Offset, too, man.
Better than the Locks or no?
It's commercially successful, yes. commercial.
We've been having debates. Jada, Styles, I want to issue. Styles, be quick. Hey, brother, what was up with that?
We're not even gonna do that on here. Shout out to 914.
I love you.
Shout out to Atlanta.
My graduates from my school being Forbes, bag drop.
Bag drop.
A mic drop, bag drop.
Bag drop.